What's going on, guys? It's Jeff, and today it's Friday. So yesterday I went through a lot of the news that we had that was going through with Russia and Ukraine, the entire situation. Today I will be giving a little bit more update because Biden did come out to talk about the sanctions that he would be going to go through with against Russia. Of course, these are all economical sanctions. I did make some notes over here. So basically, I'll just give you guys a brief run through of what was actually said by Biden. So he will be limiting Russia to be doing business in any of the G7 currency, aka in your US dollars, in your yen, in your pounds, in your euros, because in your German and France and such. Those countries, basically, when the G7 came together, they had a meeting for them to actually go through with this current situation in Ukraine. And yeah, they are going to be limiting Russia to do business in any of those currency. Secondly, US is going to be pushing for sanctions up to $1 trillion against Russia. $1 trillion, which is kind of weird because sanctioning Putin is currently not on the table yet. But it is not confirmed because Biden did say that if anything were to happen, maybe he would push, but we are not sure about that for now. But yeah, sanctioning Putin is still on the table. It's not completely off the table, but I feel that this should have been done like way earlier. But I do not know what Biden is thinking. But US will not be moving into Ukraine to fight Russia because however, if NATO were to be affected, any of the NATO countries at all, I think there's an odd 20 or 30 countries in NATO. Any of those NATO countries that get affected, US will then intervene, which is quite a good idea, I would think, because when US invaded Iraq, nobody really said anything. So it would be weird if Russia were to invade Ukraine and then US suddenly just come in to fight the fight. But yeah, I can kind of see why some people think that is very hypocritical for US to say do a lot of talking and not a lot of doing. But at the same time, you don't need to understand that this is also mainly a Ukraine and Russia situation. If US were to come into this picture, a war is going to really break out, and that war is not going to be easily won because nobody's going to win. There's going to be a lot of death, and that's the situation. All right, and then afterwards, US will only retaliate with only cyber warfare if Russia were to target US. Basically, if Vladimir Putin were to say anything at all about this, and they were to somehow target US, which is very, very unlikely, US will only retaliate using cyber warfare unless Russia step into the US space, because then that would be a whole nother situation. Biden will check back in a month to see if the sanctions are working. So, of course, we understand that a lot of these economic sanctions that US is actually putting on Russia, economic sanctions don't usually work immediately. Political sanctions usually show more of a short-term result. But for economical sanctions, 1 month is all right. But the thing is that, do you really think that with a proper full-blown invasion happening right now, pushing for an economical sanction plus checking in a month later would really do much help? A lot of people are actually expecting this entire war to be finished in the next week or so. And I can see that happening as well. But, let's not forget that, if the war's going to end in the next week or so, all these economical sanctions that the US, UK, Japan, all of them are talking about, all out of water, pointless. So yeah, I thought that it was kind of weird for Biden to kind of bring out the fact that he'll check back in a month, and then afterwards it's just the basic stuff, which is UK banning Russia flights from entering UK, and also of course businesses in UK, banks in UK for Russians are completely out of the question. And earlier, let me see. Earlier, we did receive Japan news about Japan actually imposing new sanctions against Russian banks as well. I think it's this one, where they are going to be including 3 mid-sized banks for them to be going against, aka that all these banks will not be able to be used by the Russians. But of course, these are all mid-sized banks. The bigger banks are going to be targeted by US most of the time. So Japan is just basically just kind of doing this, kind of like showing that, we are on the side of Ukraine, that sort of thing. But anyway, those are the updates. There was an update saying that Kyiv to fall to Russia in the next few hours, right after Biden's speech. This was reported, I think, about 4 a.m. last night. But of course, I'm pretty sure that as of now, the news doesn't really state that Kyiv has fallen yet. But like I said before, I do think that it is very, very possible for Kyiv to really fall to Russia. This is really a big situation for this entire thing right now. But yeah, I mean, it's all right. By the way, enough with the updates on Ukraine and Russia. Let's cover some news today. All right. It's going to be very hard for us to do a lot of news covering because this is basically going to be on the headlines for a lot of news outlets, okay? The Russian forces closing on Kyiv, bombing intensify. Like I said before, this is not a funny thing. I am smiling about it, talking about it, but I'm not happy about it, of course, okay? Nobody should be happy that lives are being lost in another country due to military action, war, whatever you want to call it. So yeah, my heart goes up to the people in Ukraine. All right, U.S. ally roll out fresh sanctions. Well, attack is Putin's most aggressive move. Ukraine under. Oh my God, it's all SPAC startup made lofty promises they can't keep. Yay! Consumer spending rebounding. A surge in cost to ship products. Okay, let's talk a little bit more about this. All right, so for people who want me to put 2 and 2 together, with this entire war going on, of course, there's going to be a lot of consequences that's going to be brought about in this entire market. Okay, let's not forget that inflation is still a thing. The Federal Reserve meeting is also still a thing in the next 3 weeks, I think. All right, so let's not forget that because supply chains is going to be disrupted because of this war as well. Okay, especially with commodities that's coming out from Russia and Ukraine, such as your aluminum, your nickel, and your wheat. All these are coming out from these countries. And let's not forget the most important part of them all, oil. Okay, oil. Russia is a big producer of oil. And if Russia is currently in this entire war, and with the Nord Stream 2 being delayed and halted by Germany and US, oil is going to continue going up in price. At least that's the concern that we are currently having. Container ship operators and big importers like IKEA, Walmart will soon negotiate freight rate that could affect the prices consumer pay for everything from jeans to cars. So of course, this come down to the same thing as the supply chain shortages as well. Of course, shipping is considered in the supply chain shortage because your supply chain, one of it is basically shipping to the consumer or shipping to the businesses to the consumer. And yeah, this is of course being a situation at the moment. Of course, with the supply chain disruption, transportation delay, of course, from the pandemic, and right now also with the current war situation. So people who are doing a lot of purchasing, especially through the European countries, there's going to be a little bit more iffy in this couple of weeks. All right. Consumer spending rebounded in January. Economists estimate. I think that this is, I mean, I'm not really that crazy over it because consumer spending. Okay, during wartime, I feel that wartime, the only thing that is very similar to wartime and hyperinflation environment is that people spend a lot of money. And for hyperinflation, when people spend a lot of money, it's kind of like a self-fulfilling prophecy. Because let's just say if you are currently in a environment where inflation is very, very high, you automatically will buy more right now because you are afraid that inflation is going to go higher and higher. And the fact that you are buying more in the short term is increasing the price in the short term as well. So the more you buy, for example, your food, your clothes, and your energy and such, the more you try to hoard all these things, the more the prices will go up. It's very natural. Okay, this is how the self-fulfilling prophecy works. The more you buy, the higher the inflation, and the higher the inflation, the more you buy, and that kind of just keeps forming this huge line upwards to make this into a hyper inflated economy. Okay, and the same thing about war, because when war happens, people basically wants to go and hoard the basic necessity, which is your food, your water, your oil, whatever it is that you want to get, because those, and it's not about the prices that is going to be the situation. The prices will not be the issue, because it will be more of a supply shortage in general. Because, for example, a grocery store in Ukraine would probably sell out every single thing. And for people who are worried in the US, they will probably be like, oh no, if US is gonna be getting into a war, I need to stock up on food. I need to stock up on canned foods. I need to stock up on oil. I need to stock up on things for me to stay at home for the next 3 months. And that's kind of how this whole apocalyptic sort of level of event would actually come to transpire over time. And that's kind of one of the similarity that we do have for high inflation, hyperinflation, and also wartime scenario, which is why I do think that, if we have more consumer spending coming in the January, February, or even March going on, it's very, very normal for us to see that. I think for the January side of thing, of course, it's not because of the war situation, because of course no one has that level of panic. However, for the January side of things, I would assume that it's due to the high inflation reports that we have been getting, especially the CPI that we received on January, giving us all the way to 7% year over year, which is, of course, very, very troubling for a lot of people. And like I said before, hyperinflation, self-fulfilling prophecy, and people are just going to keep on buying. And I think that's the reason why we see consumer spending rebounding in January. Yeah. Yeah, right. Rising wages and bank accounts fattened by government stimulus programs have also given household cash to spend, which I also talked about. I think about like 5 episodes ago. But yeah, holding them back, however, has been the persistence of the pandemic. The Omicron wave of COVID-19 peaked in January in the US. Yeah, they basically talking about inflation. Yeah, and the faster pace of inflation. Yeah. So yeah, basically my thoughts. Ooh, there was one that was interesting. Yeah, okay. SEC probes trading by Elon Musk and brother in wake of Tesla CEO's sale. So for people who are unaware, when Elon Musk did his whole sale, and then he actually reported it on Twitter. I think it was on the Friday before that. Kimball Musk, which is Elon Musk's brother, actually sold a lot of Tesla shares, and because of this, people are actually thinking that this is most likely going to be some form of an insider trading. Of course, we all kind of assume that to be the case anyway. And now, finally, the SEC want to actually address this situation, because we don't know if Elon Musk did actually do any sort of insider trading, but like I said before, very, very possible, because it's way too close for it not to be insider trading. Well, of course, I do not want to speculate out of proportion. Right now, SEC is going to be doing more investigation. Of course, the investigation already started last year when this whole situation of Elon Musk trying to sell, this was all out in the public, and the SEC was already investigating, because we already talked about Kimball Musk selling Tesla shares as well. Yeah, one day before, the Tesla chief polled a Twitter user asking whether he should unload 10% of his stake, pledging to abide by the vote's results. Yep. So Kimball Musk sold 88,500 shares a day before Elon tweeted his potential sale. And yeah, that's kind of, yeah, I think this is basically just them talking about the SEC doing the investigation. I don't think there's gonna be anything that interesting in this. It will only be when the results or the conclusion of this investigation is out. Then we will actually have some form of news for us to cover. Citadel is further paring back $2 billion in Melvin investment. So for people who are unaware, Citadel is also the one behind Melvin Capital, and Melvin Capital is also the one behind the huge shorting of the naked shorting of GameStop back in 2020 January. Was it 2020? No, it was. I think it was in 2021. Yeah, it was January 2021. Yeah, holy shit. Yeah, it felt like 2 years. Okay, but yeah, in January 2021. When Melvin Capital did a lot of naked shorting on GameStop, AMC, and all these other companies. And because of that, they lost a lot of money, clearly. I think they were down like 54% or something ridiculous year over year. And right now, Citadel is just basically saying that, they're going to be stepping back a little bit and they do not want to help Melvin Capital as much. I'm pretty sure that they did do a few. Melvin Capital has been giving out a lot of money. I don't know. Citadel have been giving a lot of money to Melvin Capital for them to recuperate in the process, but they use the money to further short GameStop and AMC and such. And then, well, clearly that didn't really work out as well. Yeah, they invested $2 billion in January 2021, alongside with the $750 million influx from the 0.72 exchange for. Yeah, this was basically what I actually explained. I think it was in March or April. I actually covered all this before as well. Yeah, I think they're just going to be talking about the whole history side of things. I'm not going to lie. Honestly, I do think that this whole Melvin Capital, Citadel, and GameStop, this entire thing could easily become a movie, like how The Big Short actually happened. I do think that this would actually make for a good movie. I think it is time for us to finally have another financial esque movie out in the cinemas again. Hopefully on AMC. If AMC can get the exclusive right for it. But yeah, I think it will be interesting if we do see any form of entertainment value from a Citadel, Melvin Capital, GameStop-esque sort of movie of how the whole naked shot actually happened. I think that would be very, very interesting for us to look at. All right, let's look at. All right, SPAC startup made lofty promises they aren't working out. A startup battery maker that would investor with rapid growth forecast said it would miss its revenue target by as much as 89%. A scooter rental app is expected to bring in less than 20% of what projected this year. An electric bus company that planned to boost revenue faster than any US startup ever told investors to disregard its projections. So, of course, all these companies were those sweethearts of 2021. SPACs were huge in 2021. Yeah, you can kind of see these are the huge SPACs that did horribly. Okay, like Nikola. Just look at Nikola. Oh my God. 2.9 million. Jeez. Yeah, I remember Nikola having like almost $200 million for their projection. It was crazy the first time I read it, and people were saying, no, this is a $500 million projection on Nikola. Okay, they're actually like underhanding themselves. They're underestimating themselves. They can do way more and such. Right now, they're doing $2.9 million. Canoe. Oh my God, Canoe. Canoe is what? Zero? No estimate. Lodestyle Motors, no estimate. Oh no. XL Fleet. I remember when Jim Cramer was talking about this on CNBC as well. Oh my gosh. Lion Electric. I think Lion Electric does the electrical bus. But yeah, oh my god, this is horrible. But yeah, 8 months after electric bus and van maker Arrival. Oh my god, Arrival is also another one. Uh, they went through the whole SPAC merger and then they just went to nothing. Okay, we draw our long-term forecast. He said, adding that the company was putting forward a more conservative view. Well, of course you're gonna, right? Oh my god, the thing about the market in 2022, especially right now, as compared to what we actually had in 2021, conservative is an understatement. Everyone is basically gonna be just putting their head down and just getting a way more humble price target, be it your revenue target and any sort of projection that's gonna be put out there. 2022 is definitely not going to be a good year for you to really just aim for the skies and just keep on saying to the moon by the dead. People don't do that anymore. Not in 2022. Okay, it's a sideways market. Okay, it's full of pandemic, full of war, and full of man. Yeah, that's kind of what 2022 is all about. Sadly. Okay, it was a different tone from the pitch the company gave investor when it went public in March. Its revenue would grow from $0 to $14 billion in just 3 years. It was stunningly rapid pace, 5 years faster than Alphabet's, the fastest US startup ever to reach the level of revenue, particularly given Arrival haven't yet produced any vehicles. So I'm not sure if you guys seen the meme that I actually reposted from someone else. Basically, the context was more like because all these EV companies were all way too overvalued, and they just came out to do an IPO. They came out to do a sort of a SPAC merger, and then they got a lot of money from the VCs. So the meme was basically saying, you know how to get a $1 billion as quick as like the fastest way to get $1 billion. Basically, just sketch out an idea of an EV, and then just pitch it to venture capitalists and just tell them that this will go to like $300 billion in the next 5 years, and you'll get your $1 billion like that. And it's kind of sad because it's true, because you can see from Arrival, from Lion Electric, even down to Rivian, like there's a lot of companies. I'm pretty sure that in 2021 we saw at least 10 to almost 20 new EV companies that came up with EVs, IPO/SPACs without a single vehicle produced at all. And Arrival was one of them. So yeah, it was it was that bad. Yeah, I think that this is just basically them dumping on the SPAC in general. Okay, let's not talk too much about the SPACs. Okay. Hold on. China's leader Xi Jinping told Vladimir Putin that Russia should negotiate with the government in Kiev, while Russia's top diplomat said talks hinged on Ukraine's surrender. Moscow-led forces continued attacks on the military and civilian targets on the second day of the invasion after the US and its ally imposed new sanctions on Moscow, and US President Joe Biden warned of a dangerous moment for all of Europe. European Union leaders backed a broad sanction package late Thursday that they said will limit Russia's access to Europe's financial sector and restrict key technologies. Leaders from the North Atlantic Treaty Organization, NATO, will hold virtual talks on the alliance next step starting at 3 p.m. in Brussels. Oh my gosh. Won't talk to the government in Kiev until Ukraine's military surrenders. We're ready for negotiation at any time. As soon as the Ukrainians armed forces respond to our president's call, stop resistance, and lay down their weapons. Demilitarizing, yeah, we already knew that. I am very, very confused with this. Xi Jinping held a phone call with his Russian counterpart Vladimir Putin on Friday, urging him to negotiate with Ukraine to defuse tension. Because China supports Russia and Ukraine to resolve issues through negotiations. Xi reiterated that China's position has always been to respect every country's sovereignty and territorial integrity. This actually changes up a little bit. I do think that with Xi Jinping actually weighing in on his outlook of how a negotiation should actually take place between Russia and Ukraine would actually change a little bit of how this invasion would actually go on. Yeah, I think that this would be interesting. I was expecting. I wasn't expecting this. That's for sure. I think this was the last thing that any one of us actually expected from China. But okay, that's the new news. Okay, it's all right. It's all right. I'm gonna be going through the updates again, and then hopefully on Monday I will go through it one more time. Of course, there will be a new video coming out tomorrow as well. So just keep an eye out for that. But anyway, Fed's official signal march. Oh, all right. This should most likely be the last one because yeah, these are the UK sanctions. Putin. What's this? Oh, this one was already. I talked about this. Yep, I talked about this as well. Ukraine. Yep, talked about this. Yep. Okay, this should most likely be the last news, which is one of the most important ones as well. Federal Reserve officials stuck to their resolve to raise interest rates next month despite uncertainty posed by Russia's invasion of Ukraine. With at least one policymaker considering a half-point move, aka 50 basis point, while acknowledging the risk created by the conflict, which has triggered one of the worst security crises in Europe since World War II, caused oil prices to jump. U.S. Central bankers stressed the need to confront the hottest U.S. inflation in 40 years. With the economy at full employment and inflation far above target, we should signal that we are moving back to neutral at a fast pace. A 50 basis point hike would help do that if data on jobs and prices stay hot in coming weeks, he said. Waller, who favored raising rates by 100 basis points by the middle of the year and beginning to shrink the Fed's bloated balance sheet by the central bank July meeting, said that it was too soon to know how Russia's attack on Ukraine will affect the U.S. economy, and it may not be much easier by the time of our March meeting. All right, so the reason why people are so confused by this entire situation and why the Fed's meeting would hold such a huge precedent in the next coming weeks is because with oil prices going up, oil is also very, very heavily connected to inflation. With oil continuously going up in price in this manner, inflation is definitely going to be running hot for a little while. That's kind of the situation that we are having, and also the concern that we're actually having, especially for the Feds, because one of their main goal for whatever they are doing for their entire life is basically to make sure that inflation do not go crazy, do not go hyperbolic like what we're actually having right now, where we are seeing 7%, 8%, 9%, or whatever it is. Their goal is to ensure that inflation increases at about 2%, 3%, something minimal year over year. And because of the oil prices suddenly going up like 8% just in one day yesterday, that would definitely put some form of a stress for the Federal Reserve in order for them to actually ensure that we actually have normal inflation going forward. And of course, when we have a possible inflationary trend going upwards, what the Federal Reserve can actually do would most likely to be raising rates. Of course, personally, I still think that the chances of us getting a 25 basis point increment is still there as compared to a 50 basis point hike. But I'm not going to lie to you and tell you that I don't think a 50 basis point hike is not coming, because it's still very, very possible. I do think that this is a very, very 50-50 situation going on right now. Personally, I did think that it would be a more of a 25 basis point chance of that happening. because with the war happening, I don't think that the US want to shock their own economy by actually raising rates by 0.5%. I think that that would simply just shock the economy. But at the same time, if because of this war, oil prices is going up, some of the commodities is going up, that might also give the US a good chance and a good reason for them to actually increase their rates by 0.5. It just kind of makes sense at that sort of thing, which is why I think that I'm very, very 50-50 about this kind of thing. But anyway, the FOMC meeting is going to be happening on the 15th and 16th of March. It's going to be a 2-day meeting, and Jerome Powell is going to come out on the 16th of March to talk more about what's being talked about in the entire FOMC meeting. And I'll definitely be covering that, of course. But anyway, thank you guys for watching. Oh yeah, hold on. Before I thank you guys for watching and such, let me go through my trades of the week. How can I forget? All right, my trades of the week. You're gonna be surprised. I sold calls on Palantir. I sold calls on SPY. I sold calls on Snapchat. Okay, and then in return, I sold puts on. Okay, I sold. To be fair, okay, me selling the puts here are the puts that I already bought. Okay, so I actually am making back my money a little bit. I sold puts. I sold my puts on my Ford. I made a good 180% return on those. I sold my puts on Peloton, which I made a good, I think it was 90% return on those. I sold my puts on SoFi, which I made a good, I think 40%. It wasn't as much as my Ford. And I sold puts on my Robinhood, on Hood. Those got me a 40%, I think. I don't really have the percentage here, but it was about 40% or so. But yeah, those are the trades that I did make for the past week. Of course, I still have a lot of puts on other stocks, and I'm still not going to be selling them completely out yet because I'm not sure what's going to be happening. I do think that this have a chance of a worsening. Of course, I do not wish for things to worsen. It's just that I'm not going to just like chicken out on a chance for me to earn more money. So hopefully my long positions are going to be the one that's going to be making money in the near future, because that's kind of what I'm hoping for as well. I'm hoping for a better economy in the long run. I want to be long on the economy as well, and because of that, hopefully we do get some form of good news then. But anyway, that's all I have, and thank you guys for watching. I do have a video that will be coming out tomorrow on Saturday, and then afterwards I'll see you guys next week on Monday. Thank you guys for watching, and I'll see you guys next time.